Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Ryan Hicke, CEO at SEI, to discuss driving growth in financial services. Ryan, it's great to see you again. Welcome back to Trade Talks.
Thanks so much, Jill. Great to see you again.
You got it. And last time we met on Trade Talks, you were fresh in the CEO seat, almost a year to the day. How has the company evolved since then? And what are the growth priorities you've set for SEI?
So it's been an action-packed year, as you would expect. I think we've evolved really, significantly in two areas, both on the external front. I think there is a much more uniform and unified message out in the market. 55-year history, we really felt, and I felt taking the helm that we really need to kind of recapture that spirit of SEI back out in the market, but make sure that infused itself internally into the culture. So there's a lot of energy. There's a tremendous amount of activity with clients and prospects. And we really coupled that with your question, Jill, around growth by taking the opportunity last summer to step back and say, what does the next kind of 10, 15-year run look like for SEI? Where do we need to start placing bets now to really drive sustainable growth in the future? And knock wood, that's really starting to translate into tangible success for us.
How do recent leadership appointments at SEI align with the industry needs today?
Yeah, I think that's a great question. So for us, it was twofold. One was, I'm a big believer in wisdom of the crowds. We have to go get some external experience and bring that inside our own walls and learn from people that are doing things out in the market. But if you think about where we're headed, we've been really built off 4 existing growth engines. And we believe as a leadership team and a board that we really needed to start adding new growth engines. But those need to manifest themselves in different ways. So when you talk about automation, you talk about AI, digital assets, and overall just the rise of alternative investment vehicles. We're doing things in our existing businesses today, Jill, to exploit those opportunities. But I really wanted a distinct focus from a leadership perspective, somebody that was spending all of her time internally and externally thinking about the future and really giving her an opportunity and giving the team an opportunity to take some risk and experiment to lay some railroad tracks for us for future growth engines.
What types of companies are SEI's customers?
So we run the gamut in terms of we'll have individual RIAs, advisors. We have 50 of the top 100 investment managers in the United States and 10 of the top 20 banks. So really it's large institutional wealth management firms that are really looking to partner with SEI for technology, operations, or asset management. But interestingly enough, we have about 8,000 financial advisors all the way up to the large financial institutions that I mentioned. And we're about 88% revenue inside the US and 12% outside the US. So still pretty domestically focused inside the United States.
Ryan, what are you hearing from clients in the financial community about the challenges facing their businesses?
Yeah, I think you're hearing kind of 3 themes. One is, I think, an increased regulatory environment. It's interesting, Jill. I've done so many executive meetings and client meetings. I've yet to meet the firm that wants to add to their strategic partners. So I think there are a lot of firms looking at how do they rationalize their partnership footprint and looking for firms like SEI or our competitors to bring more to the table. So I think the regulatory landscape is driving things. The speed of technology change and the ability for them to harness that. So, we've already mentioned AI, how are firms actually experimenting with generative AI? How are they deploying that? I think what we're really seeing in the market is an open willingness to collaborate and partner in different ways. And then I think the third, which really is not new, but maybe it's just become more prevalent, is people are realizing there is a finite amount of capital inside their organizations, whether that's money, people, time. They can't do it all. And our best client relationships are the ones where we are really focused on what we do well, and they are focused on what they do well, and we're really enabling more of their growth for their end clients. So I think the last year has been an interesting opportunity for firms to step back and really reassess where should they be spending their time and money.
Why do you think there's been increased demand for alternative investments in this environment?
Well, I think that's a couple of things. One, I think people are looking for different correlations and asset allocations, so different return sources. Obviously, there's been significant returns in some of the private capital markets in terms of, whether it's private credit, BDCs. I think also, a natural evolution over time of things that institutional clients have been accessing for years tend to make their ways then into intermediaries or end investors. But I think as products start to simplify and the alternatives become more available to intermediaries and private clients, I think it's explosive. And I think people are smarter, they have access to more information, and they want those diversifying sources of return and risk in their portfolios.
What's your perspective on the M&A environment?
I think it's cooled off a little bit. So we've actually gotten much more proactive on the M&A front. But I think, right now you're certainly seeing, I think valuations level off a little bit and become maybe a little bit more pragmatic and realistic than they were a couple of years ago. I think the market overall has changed. This could be an unfair statement, but I think for a few years, revenue got rewarded at all costs. Any type of revenue got rewarded, and we never played that game. So maybe we got punished for that a little bit. But I think now there's a bit of a shift again to focus towards, is that revenue profitable? Is that revenue repeatable? So for us on the M&A front, we're really looking for firms that either can drive greater acceleration of capabilities for our clients, but we're also looking at good operating businesses. So businesses that we think our kind of scale and our ability to actually, drive technology change could accelerate. But I think it has definitely cooled off.
And finally, how is SEI thinking about leveraging generative AI?
Well, I think two ways. One, we're really looking inside our own walls. So we have a lot of operation, people across the company. So how do we actually automate tasks? How do we leverage AI to really free up more of our employees to provide more client service, more client-facing support to our markets? We're looking at actually how do we bring our regulatory, technology, and compliance folks together to think about when we're doing things, are we doing things looking across the whole enterprise? And as I mentioned at the open of your interview, really collaborating with clients. Are there ways for us to partner with clients, in this space where we're doing things together that actually could be benefiting both the client and SEI? So we've got a lot of things going on that front right now.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks.
Thank you for having me, Jill.
You got it. Thank you.